Ajay Patil is the CFO of Cummins India, now joining us on the show. Good afternoon, Mr. Patil, and good to have you. To begin with, your revenue and EBITDA has been impacted due to the lockdown. Tell us a little bit more about the impact of COVID on your financials and how the company has fared.
I would start with our Q4 numbers. I think year on year, our reported revenues are down 21%. And when you take into consideration the COVID-19 impact, our revenue decline is about 7%. And year on year, our reported EBITDA is down 41%, and without COVID, it's down 14%. Because this being also the full year number, on a full year basis, our total revenue on a reported basis are down 8%, but without COVID, 5%. Within that, I think the domestic revenue without COVID grew by 2%, and exports, even without COVID impact, declined by 20%, which is in line with the guidance that we had provided for our exports revenue. Our exports revenue in our key markets have been soft through the year, primarily for a number of different reasons, economic, geopolitical. And when you see it, that despite these economic conditions and a tight liquidity conditions, we managed to finish our year on a very strong note from a cash perspective. So we have a very strong cash position as we exit the year and a very strong balance sheet to begin the new fiscal year. You asked me about the cost actions. We have been anticipating a slowing economic growth rate. And in order to respond to that, we did take some actions in December 2019, January timeframe, primarily to rationalize some of our headcount-related costs, which also we had reported. And since then, in Q4, we have been looking at various scenarios, and accordingly, we have deployed a set of actions, primarily to address our fixed and discretionary cost. And we do anticipate the impact of these actions to reflect in our coming quarters.
Right. Moving on then, let's also talk about your overall capacity. I understand that you're running more than 50% capacity of some of your factories, and your overall capacity utilization is at 35%. What has been the outlook on supply chain, on approvals during this lockdown period, and when do you think that you can get back to the normal capacity utilization levels?
Our supply chain partners are located in the state of Maharashtra, Tamil Nadu, and the National Capital Region. And over the past few weeks, we have seen that our supply chain partners have gradually started to open up, and they are ramping up their capacities as we speak. Our plant locations too have started to open up in a gradual manner since I would say the second or third week of May onwards. And we did get permissions from the local authorities to add resources at various our plant locations. And we continue to work with the local government authorities to seek resources so that we are able to get our capacities back to our normal levels in a shortest possible time. You asked me about the time frame, where do you anticipate we to be at a normal level? I think keeping in mind that the COVID-19 impact is still playing out, and there is a fair amount of uncertainty with respect to when this COVID-19 is likely to come under control. Hard for us to really put any exact time frame, but assuming for a minute that the COVID-19 does come under control, one would say that it might take about 2 or 3 quarters for us to get to a level where our capacities will be fully loaded from an external demand perspective.
Export markets have continued to show some softness in the last few quarters, obviously because of the global economic challenges. So which markets are seeing continued stress, and which are the ones where recovery seems to be imminent?
I think we have a fairly broad-based export market. I mean, our key export markets are Africa, Middle East, Europe, Latin America, China, Southeast Asia. And I think most of these markets, even without COVID-19, were experiencing some headwinds from an economic growth perspective. And we have been seeing that reflected in the order board in our last fiscal year. Now, one can attribute the reasons for this slower export growth to a number of factors. It could be the underlying growth rate, which are softening in those markets. It could be geopolitical reasons. It could be the oil prices, which underwent a significant change. A combined effect of that we have seen plays out in our key exports market. Over next fiscal year, which is the current fiscal year 2021, I think we'll have to still take a kind of a wait and watch approach at this point in time because the growth rates in these respective end markets is not symmetrical. We see some markets, showing some signs of recovery, while some markets continue to sort of remain flat to negative. So in summary, I would say that, the exports market is hard to predict as to how soon they will revive. So I would say we would take a sort of a cautious approach and wait and watch and see it as it plays out by quarter.
Okay, what about the margins? I mean, to what extent were margins impacted because of the change in revenue mix? And what's the expectation over the next perhaps 2 to 3 quarters? Could we see margins stabilizing?
No, certainly. Revenue mix does play a big part in terms of how our margins, are reflected. On exports, certainly is a critical component of our revenue mix. No doubt, besides exports, our domestic revenue mix is also equally important. But on a full year basis, I think we did provide a guidance on our exports revenue will be down 20%. And that guidance did turn out to be true. In terms of where we are and how does the export market rebounds, as I said earlier, I think we will have to see how some of the key markets come back and revive, and how soon they come back and revive is a critical question. We do see some kind of signs of early revival, but are those really stable and one can start, basing the scenarios on those is hard to tell at this point of time. So broadly speaking, I would say for exports, we will have to, give another quarter or two before we could start to provide any kind of a stable outlook on the exports demand.
Significant impact that the pandemic is going to have across various sectors. What has been the revenue breakdown, power gen, industrial, etc.? Where are you confident of strong growth?
Yeah, typically, as you said, we typically provide our results in, broadly speaking, power gen, industrial, distribution, and export segments. Out of these 4 segments, our belief is that our distribution segment is the one which will sort of come back and rebound earlier than the other segments. And primarily because our distribution segment, provides services to our customers where we need to still look after the equipment, go through the normal service cycles, change the critical spares as they need it. Those are the reasons why we believe that the distribution business will come back sooner than others. Secondly, within those, the industrial segment, even for last fiscal year, which is 2019-20, did present itself with a 4% growth rate year on year. Without COVID, it was 9%. And we have seen that some of these segments within our industrial have done well, be it the railways, be it the compressor segment. So we have a reasonably stable story on the industrial side. Now, the question which comes along for the current fiscal year, would that continue, especially keeping in mind the disruptions that is caused due to lockdown, and how soon most of our customers are able to come back and start their operations and bring them to normalcy in the shortest possible time. Power gen business, is fairly broad based, and it kind of depends on number of different segments. We do believe that the demand for the power gen segment would be a bit asymmetrical, where certain segments, be it healthcare or e-commerce or data centers, might revive sooner, and while some of the other segments, be it infrastructure or construction, which we do believe may come back sooner than what we anticipate, primarily because of the government's focus on investment in infrastructure, be it road, ports. I think those are important indicators for us to see whether our power gen demand will come back. So to summarize, I think among the 4 segments, I would say the distribution is likely to revive first. and then we will see some sort of a revival in our industrial, and then followed by power gen and exports.
Had gone on record to categorically mention that the lockdown that was imposed in India was for way too long, and that's why we'd have to bear the economic repercussions of it. But for a country of this population, 1.3 billion, how better could the situation have been handled, according to you, by the government with the least amount of economic impact?
I think the COVID-19 breakout and the spread globally and the speed with which it happened across the world and impacted, all the economies of the world is something is unprecedented. I think nobody anticipated it to become a pandemic so soon and be so widespread across the world. As many of us can think, no one in the living memory possibly has experienced an event of this magnitude, which has impacted the world in such a short period of time. And therefore, responses were evolving while the world was grasping and understanding the true impact of the virus. In these contexts, I think our number one priority continued to be safety and well-being of our employees. And at the same time, we were focused on ensuring that our customers are supported even during the period of lockdown. We are in this process committed to bring our facilities back to our normal operation at the shortest possible time, in a safe and secure manner, and remain committed to support our customer and communities as we collectively deal with this crisis on hand that is playing out.